What is going on, my friends? Ryan Williams here, back with another video, and we are now officially in September of 2021, which means it's time for another dividend portfolio update. In this video, I'll be opening up my entire dividend stock portfolio to you guys, where I'll be showing you everything, like how my portfolio performed last month, which stocks I bought, what I've sold, which stocks I'm considering adding to my portfolio in the future, as well as some other things that I have planned for this portfolio coming up. So stay tuned for that. Anyway, before we get rocking and rolling, if you guys are excited to talk about some dividend stocks today, go ahead and give this video two really big thumbs up. And whether you're new to my channel or have seen some of my videos before, if you're enjoying this content, I kindly ask you to please consider hitting that subscribe button as well, so you can stay up to date and follow me along on my dividend investing journey. Anyway, thank you so much for doing that. You guys are awesome. And now, without further ado, let's get into it. All right, now if you guys have seen my videos before, you will be pretty familiar with what we're looking at. But for those of you who are newer to my channel, this is my dividend portfolio tracking spreadsheet, which you guys can get for free. There is a link to grab it in the description of this video, as well as a link to another video which will show you how to get set up and get rocking and rolling using this spreadsheet. But it's pretty dang plug and play. All you really need to do is just input the ticker symbols, your number of shares, and your average cost per share, a couple other things, and then you'll be all set up and off to the races. So pretty simple to get going. But how I'd like to start this portfolio update, guys, is just to briefly discuss how my portfolio has performed and how my dividend income has grown just in the last month, or since the last time we did one of these videos. So I'll throw this up on the screen in just a moment, guys, but last time we did one of these videos, my portfolio was sitting at $27,075.98, which you can see from this key stats thing here. And switching back over here, as you can see down here on this key stats, let me scroll down so maybe it's a little bit better. This right here, my portfolio's current market value is $27,350.74, which is only a few $100s more than last time we recorded one of these portfolio update videos, which does sound good in theory. But guys, one important thing to note is every single week, or actually every single month, I'm investing probably about $500 in this portfolio. So a gain of only a couple $100, including those contributions, actually means I lost some money in the month of August, which, you know, is not the best thing. August was kind of a rough month, which we'll get more into in a second. But just to give you a little bit better perspective on how much I lost or how my portfolio went down in the month of August, I'll throw up the key stats thing one more time. And as you guys can see, last time we recorded one of these videos, the total gain of this portfolio was 9.17% for a total gain of $2,274.36. And switching back to where we're currently at now, the total gain is 7.52% and just over $1,900. So just in August, guys, I lost probably, what is that? Maybe about 1.6% total gain. Do I have that right? About 1.6, 1.7%. And in terms of dollars, it looks like I'm down about $300, maybe $350, maybe a little bit more than that. So, you know, in the month of August, it's not too down, maybe 1.5%, couple $100. It's no big deal. Hopefully we'll see that bounce back up in September, but that did happen. And I'm actually not super used to seeing my portfolio down month to month. It just seems like the stocks that I own keep going up and up, or at least my portfolio in general just keeps going up and up. I do have some stocks that have consistently not performed very well, which we'll touch on in just a moment. But before we get to that, guys, let's scroll over here. I want to talk about my annual dividend income. So as it currently stands, my annual dividend income is $1,236.93. And if you guys saw my last video where I talked about my dividend income for the month of August, you'll know that I just hit a brand new record for 1 month. I gained about $152 in dividend income in the month of August. If you guys want to check out that video, I'll link it in the description below. But that was pretty cool, and it is cool to see my annual dividend income continuing to go up. And just for reference, guys, in last month's portfolio update video, my annual dividend income was sitting at about $1,207. So just in a month's time, we gained about $30, or about $1 per day, which actually is, I don't know if that's a super quick growth rate or not, but I'm happy to see it. And as far as my portfolio's dividend yield go, guys, if we just scroll over here just a little bit and look at this cell, you can see that my portfolio is currently yielding about 4.5%, which really does not fluctuate too much. My portfolio's dividend yield tends to stay between 4.4 and I would say 4.55 at the highest. Now let's jump over to Seeking Alpha real quick, guys. This is all of my holdings, same ones that are in my portfolio spreadsheet. And what I'd like to do now is talk about some of the best performing stocks and the worst performing stocks in my portfolio in the last month. So the few stocks that performed the best in the last month for me were AWR, which gained about 4% in the last month, Southern Company, which gained about 3.8%. Guys, utilities or my utility stocks just did really well in this last month. I'm not exactly sure why. Altria Group, which was up about 2.4%, and then AbbVie, which was up about 2.2%. And then let's scroll down and take a look at some of the biggest losers, guys. It actually kind of sucks. So Starbucks in the last 30 days is down almost 10%, 9.31 to be exact. Campbell's Soup really took a hit, down 9.17% in the last month, but no surprise there, guys. That stock just continues to keep going down and has really been plummeting in price. And even here, if you look at this column, this is the 5-day performance. In the last 5 days, Campbell's Soup is down about 6.5%. So it's really been taking a hit. The third biggest loser in my portfolio in the last month is EPD, which is down 8.46% in the last month. And then in fourth place, AT&T down 4.12%. No surprise with that one either. That one's really been trending down lately as well. And then last one we'll mention is WP Carey, which was down just over 4% in the last month. So overall, guys, just a few of my stocks really took a hit, okay? Down 8+%, which is something you never want to see. But the silver lining, and I say this from time to time, the silver lining is that it does make them more affordable to buy. However, Starbucks is still pretty expensive to buy. I think the PE ratio is still in the 30s. Campbell's Soup, I'm going to hold off on buying any more of that for a while because it's already 6, almost 7% of my total portfolio. So I don't want to make that any larger of a position than it already is. And then EPD, I actually might buy some more EPD here pretty soon. I'm always buying, I feel like I'm always buying at least one share, a couple of shares every single month. But I might as well pick some up since it's, at almost a 10% discount in the last 30 days. All right, guys, now with all this said, let's move on. I want to talk about all of the stocks that I bought in the month of August. So as you guys can see on the screen here, like I just mentioned, I'm always buying a little bit of EPD here and there. And the first purchase that I made in the month of August was EPD. I picked up 5 shares on August 4th. So I picked up a good handful of shares and added to my position with EPD there. The next purchase that I made was Procter & Gamble, guys. On August 16th, I almost bought one entire share. I just contributed all of my weekly contribution to Procter & Gamble, about $125. And then the last 2 purchases, guys, I'll put these up side by side right here, were from Intel, which is the newest position I've added to my portfolio. So between these 2 tranches, between these 2 different purchases, I now have almost 5 total shares of Intel. And that's about it as far as purchases go. And I did not sell any stocks in the month of August, so we don't have to talk about that. Now, going back over to the spreadsheet, guys, I want to share with you what my watch list is looking like. So pretty much all the same stocks as last time: Lowe's, Microsoft, Vici, Pepsi, Target. These are all things that I'm considering buying or kind of looking at closely. But the one that I did add was BBY. I haven't done a ton of research into this company yet, but someone recommended it to me, and then at a glance, it looked pretty solid, so I wanted to add it to my watch list. And at this time, I have 3 different stocks in this watch list in the consumer discretionary sector that I'm kind of thinking about, and they're all kind of similar in the sense that they're retail stores, but they're all different like industries or different types of retail stores. So we have Lowe's, which is obviously like home goods, hardware, definitely more industrial stuff. Best Buy, which is pretty much strictly electronics, right, and technology. And then Target, which is very all over the place, kind of has a lot of different stuff. And out of these 3, guys, like I said, I haven't done much researching into Best Buy, but the one I'm probably most hyped about is Target. And this is not to say that I'm going to be adding any of these 3 stocks in the near future, because I'm pretty content where everything's at, all my different holdings. But that is the one that I am most closely considering if I was going to add a consumer discretionary stock at this time. That could change with more research or if I find another stock that I like better. Another one that I was considering was McDonald's, but I don't think that I need another food stock in my portfolio. I have enough of those already. All right, guys, now let's jump over to this diversification page real quick. and I want to talk about my actual allocations versus target allocations. So as I mentioned, I added a new company into my portfolio, and that was Intel. And at this time, just with the handful of shares that I bought of Intel so far, I'm at about 1% allocation with that stock and in the information technology sector in my portfolio. And my target allocation is 3%. So I'll probably end up getting to about 14 to 15 shares of Intel before I switch gears and buy something else. And prior to that, guys, I was spending some time picking up Procter & Gamble and have built it to near 6% of my total portfolio allocation, as you can see from this pie chart here. But that is one thing I would like to continue doing, is buying Procter & Gamble. It's a little bit pricey right now, but I do believe because it's such a good, reputable stock, it is worth the more expensive price. I think it is one of those stocks you could buy and buy, just keep buying forever. I'm definitely more inclined to buy stock like that when it's not at a discount than another stock like Starbucks. I have a lot of faith in Procter & Gamble, so I don't mind paying a little bit more for it. But just looking at my different allocations, it looks like my communication sector could use a little pick me up. It looks like I could add a little bit more to consumer discretionary. We just talked about consumer staples a little bit. One thing, I did take a percent from consumer staples and put it into technology. This was sitting at a 25% target allocation, but I wanted to, 24%, it's not too much different. So I wanted to add a little bit more, show a little love to technology there. And I may continue adding to technology over time and make that a bigger allocation, but I wanted to start with 3% for now. Let's see, what else could I do? After I get the technology up, I may be able to start buying back into utilities. The thing is though, I probably wouldn't buy into, the two utility stocks I have in my portfolio are AWR and Southern Company. I probably would not buy into AWR right now, and I'm not sure that I even want to add any more to Southern Company. So it is possible that I may either hold off on buying utilities and just keep this allocation under its target. I actually may even lower the target allocation for utilities and put that somewhere else. But I don't know. That is one other thing that I could do is contribute more to utilities. So anyways, stuff for me to think about. And I know I just spit a ton of different stuff out at you guys. I am totally thinking out loud here, just kind of rambling on. So I do apologize for that. But those are some of my future plans, or things I'm considering doing to this portfolio moving forward. All right, guys. Now what I want to do is switch gears a little bit. I don't do this too often, but I would like to start answering some of your questions more in these videos. So that's what we are going to do right now. I'm going to take a few different comments I've gotten on some of my videos and just try to answer them live on this video for you guys. So the very first question I got comes from one of my Ride or Die subscribers, Shannon Roberts. Shannon has been with me from the get-go, since before I even had probably 200 subscribers. And with that said, Shannon, thank you so much for your support. You are a rock star. But Shannon asks, hey Ryan, have you had to balance out your portfolio? What strategy do you use? And as you can see on the screenshot, I did reply to Shannon in the comments, but I'd also like to address that question here for those of you who also were wondering the same thing. So to answer this question, yes, I've definitely had to balance out my portfolio. So when I first got into investing, guys, I basically was buying one sector every single week. And this was when I was using Robinhood. So one week I would buy communication sector. The next week I'd maybe buy consumer discretionary, and then consumer staples the following week, and then energy after that, and then financials. I wouldn't pay attention to what's high priced, what's at a discount. I would just buy sector by sector every single week. And that helped keep my portfolio pretty evenly balanced between all of the sectors, because I was contributing maybe $100 every single week. So one week I was putting $100 into one sector, $100 into the next sector. So it stayed pretty evenly balanced across each sector. But as I made this spreadsheet, having this spreadsheet actually really helped paint a picture of my portfolio for me. And even being able to compare actual allocations to target allocations have been a huge help. And that is now how I keep my portfolio balanced the way that I like it. Is number one, first setting up my target allocations, which is something that I'm tweaking pretty frequently, which may or may not be a good thing. But what I do is I first set up my target allocations where I want them, and then I will try and get my actual allocations to match that. And then within each sector of my actual allocations, I will kind of determine which stocks I want to buy. Like using communications, for example, I have two different communication stocks, AT&T and Verizon, ticker symbol VZ. And so how I balance that out within each sector is kind of now at my own preference, just based on my sentiment for the stock and different variables surrounding each stock. So hopefully that answers your question as to how I balance out my portfolios or how I allocate different stocks and sectors. As you can see, it's not, evenly balanced whatsoever. I definitely have some allocations higher than others. All right, guys, now the next question comes from Nuhu Isifu. I hope I pronounced that right. Anyway, they say, hi, Ryan, would you consider replacing MO, which is Altria Group, in your portfolio because it's a quote-unquote sin stock? To answer this question, would I consider replacing Altria Group in my portfolio because it's a sin stock? I would consider replacing Altria Group, but I wouldn't do it solely because it's a sin stock. For me to get out of Altria Group, which has been performing very well for me, I know my allocation's up maybe 17 or 18%, so it's been performing really well. And also the dividend for that company is very high, I think in the 7.5% range, somewhere in there. So with that said, it's kind of a hard stock for me to want to replace just because it's been doing so well for me as an investment. I would, however, sell out of it if, for example, something happened to the dividend or something changed with the fundamentals of the company, or if their numbers just continue to decline and the company was looking like they were headed for trouble, I would consider selling out of it then. But at this present time, I don't really have any inkling to sell out of Altria Group. All right, the last question that I'll answer comes from Two Boys To Do, who asks, what kind of apps can I use for the dividend stock? I'm new in stock. I think that they mean that they're just new to investing in stock. So good question. There are a handful of different great apps or brokerages that you can use. Just off the top of my head, a few good ones, or a few popular ones rather, are Robinhood, M1 Finance, Webull, Charles Schwab, which is what I use, Fidelity Investments, TD Ameritrade's another one. Anyway, there's a good handful of brokerages out there that you can choose from, but the most popular ones, especially amongst beginning investors, seem to be Robinhood. M1 Finance is very easy. It's a good hands-off way to invest from what I've seen. And if you're super new and really don't want to have much involvement with what stocks you're choosing and stuff like that, you could always go with things like Acorns or Stash. All right, guys, now that pretty much concludes this portfolio update video. Thank you so much for taking the time to watch this one and sticking around till the end if you are still here with me. And if you have not done so already, please don't forget to hit the like button on this video before you click on to the next one. And if you enjoyed watching this and would be interested in seeing more stuff from me, go ahead and hit that subscribe button as well. And before I sign off, guys, leave me a comment below real quick. What do you guys have going on in your portfolios upcoming in the month of September? What stocks are you buying? What are you looking at? What's looking good for September? Let me know in the comments below. I'd love to hear. Also, I know I mentioned this earlier, but if you guys want to grab the portfolio spreadsheet that we saw earlier in this video, there's a link to it in the description, as well as a link to a video that shows you how to get set up and start using the portfolio. So check that out. Feel free to comment below, or feel free to send me an email if you guys are having trouble or have any questions. I'm happy to help. And with that said, I will now get out of your guys' hair. Thank you once again so much for watching this video and for all of the support you guys show me and have shown me so far. I really do appreciate it. I hope you guys have a great day, and I will see you in the next one.